In this presentation, we will create an invoice for inventory, creating that invoice from a billable expense. In other words, we will start off with the purchase order for a custom customer. We made a purchase order for a particular customer, then we paid for it with a check that we then assigned to a customer, making it billable to allow us to help us link that information to the invoice, which we will now create for that customer, billing the customer for that piece of inventory, in our case, the guitar, within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our Get Great Guitars file. We're going to take a look at our objectives, selecting the plus up top in order to do so. We will be creating an invoice. The new thing here is, of course, that invoice will be linked to the purchase that we made. So we remember the transaction that we have. We're imagining this full process, whereas we had someone come into our store from music store stuff. A customer came into our store, said, I want this particular guitar, a Gibson guitar. We need it in this color. We don't have it here. Therefore, we ordered it from Gibson with a purchase order. We then put on the purchase order that it is for a particular customer so that we can link that out and process that and follow that through as we get the guitar. We then got the guitar and paid for it with a check and indicated and populated the check with the purchase order and also indicated that it is for this customer, as well as making it billable to that customer so that we can now link it to the invoice. And that's what we will create now. We will create the invoice, linking it to the expense. Not a perfect method, but one that will help us to indicate and link through the full purchase process of the guitar for a custom purchase. So we're going to close this back out. To see this one other way, we can go to the expenses on the left. We're going to go to the expenses tab up top. We see here that we had a Gibson, the purchase order, that purchase order for a particular customer. If we select that purchase order, we'll see that we purchased it for music store stuff. So we bought it from Gibson for this customer. And then if we scroll back or close this out, we then paid Gibson, the vendor, with this check. So we paid Gibson with this check. And that check, we also linked it to a billable item to this customer, music store stuff. Now we're going to create an invoice, which will then pull over this expense. Not a perfect method because this is the cost, not the sales price, but one which will help us to pull this over, link everything through so it all ties out. So we'll close this back out. We're going to create an invoice by selecting the plus item up top. We're going to go to the customer tab to the left and select an invoice. Within that invoice, we want the customer, that being music store stuff. We're just going to type in music store stuff, and there it is. We'll select that item. We'll scroll through them as we normally would. It's a customer. It's a customer email. We're not going to put the customer email, but we could if we were to send it in that format. Note on the right, we had this add invoice item. This is the billable item. This is the thing we want to add. This is tying it out to the expense. We could open it if we so choose. We're not going to because it would take us away from the invoice. We're just going to say add that. So we're going to add it, and that'll populate our invoice. We'll see that it's connected with this link here. If we select this link, it'll see that connection. We can go to that bill by selecting this item, or we can remove it. We're going to close this back out and go straight through our invoice as we normally would. The billing address we'll keep there populated. Doesn't have the full address, but that's all we need right now, so we'll keep that. We've got the net 30 when we're going to get paid, and then we're going to keep it on the January 25th. Therefore, the due date is 30 days later according to the terms, February 24th. No shipping information will be input for us. Down here then is what was populated by the bill. So we have the Gibson SG was populated. The problem with this method, notice it's linked here. So we see that link, we see the link here. The problem with this method is it's pulling over what we are billed, what we paid. And we need this to be not the amount we paid, the cost, but the retail price, because this is an invoice. We need to mark it up. We can see or find that retail price easily by just going to the line underneath and saying GSB tab and saying, okay, it should be this amount. I want to keep the top one, the linked item. So I'm just going to go back up top and change that amount to 777.40. There we have it. I want to keep this top amount because it's the linked one. So we'll delete the second one, just deleting that. And there we have it. So again, not the perfect method. It takes a little bit of a change. We want to make sure to make that adjustment, but through that adjustment, we can have that linked go all the way through the purchase order, through the check that we pay, through the invoice that we make for a particular customer. The rest will be a standard invoice process. We've got the sales tax down below. I'm going to change that sales tax to 5%. QuickBooks has given us the sales tax for New York, our current location. We're going to make it a generic problem here with just a 5% by going to the override. And we're going to make it just 5% as we've done through the problem. We will confirm the override and tell QuickBooks it's just because, just other down here, and that's why we're doing it. Confirm the override and close. So there we have that. We have that adjustment to the sales tax then being the 777.40 times 0.05 or 5%, 38.87. So if we consider what's going on with this invoice, remember the invoice means accounts receivable is going up. That's what an invoice is. We're sending this out. We're expecting to receive some type of payment in the future, possibly a check in the mail. Accounts receivable is going up, and it's going up by what we expect to receive the check for, $816.27. The other side going to sales only by the amount that we earned, the sales price, 777.4. The difference, 38.87. Going to the payable for sales tax payable, the other side being inventories going down and cost of goods sold, the expense is going up. Two amounts not on this invoice, but amounts known in the amount we saw, because that's the original amount of the bill, which you can see up top now, is this $598. So inventory is going to go down by $598, the cost of the guitar, and the cost of goods sold expense going up, bringing net income down by that same amount. Let's close this out, check it out, and look at the financial statement. So we'll go to Save and Close so that we can check that out. And then we will go to the reports on the left. We're going to take a look at those reports. Favorite report, the balance sheet first. So we'll go to that balance sheet so we can look at it. And changing the date range up top from 01/01/19 to 12/31/19, that's January, through December 2019, and run that report. Then we'll go down to the accounts receivable. That's where it went, so we'll check that out. Look at accounts receivable. This is the account, of course, that means people owe us money. Here is the music store stuff. Here's that sale we just made, $816.27. Clicking on that will take us to the invoice. That, of course, is the full amount, the amount we expect to receive. Closing that back out, scrolling up, back to the report. We are now going to open the profit and loss in a new tab by right-clicking on this tab up top and saying duplicate. And then I'm going to pull this one to the right because the duplicated one says balance sheet, and it's the balance, so we'll keep the balance sheet there. And then we're going to go to the reports on this tab and open up the other favorite report, the profit and loss report, performance report. How are we doing report? How's the process going? 01/01/19 to 12/31/19, the year of 2019 is going to be the date range. We will then run that report. Scrolling down, we see here that now, notice what happened here. We see it in sales, and we also have the sales of product income. So notice everything else has been going to the sales of product income, and now we have this one in sales. So it's kind of a duplicated account. It's okay. It doesn't hurt anything, but this is another area where we're saying, we probably don't need that duplicate. We probably would rather have it all going into the sales of product. So let's take this opportunity once again to make that change as we see it. So we're going to say, I would rather have this going here. How did that happen? Well, when we made this invoice, this Gibson, then the item that we set up is going to a different sales account. For some reason, there was two sales accounts. That's what was set up when QuickBooks set up our accounts. So we should get rid of one of the sales accounts, set this item up to be going to the correct sales account, and so we don't have duplicate sales accounts, and then possibly make that account, that duplicate account, inactive. That's going to be our goal here. So let's go to, and to do that, let's go to our items first. It's going to be in the sales on the left side. We're going to go to the products and services up top, and we're looking for the item we just sold, which is a GSB Gibson. So if we scroll down, we're looking for the GSB, so it's going to be this one. We want to edit this one. So I'm going to edit this And if we scroll down, we'll see this income account, and it's got sales here. So if I select that drop down, we had sales, and then we got sales and products. There's two of them that we can put them in either one. This is GL accounts. This is part of the GL. They're only showing the sales ones because these are the sales items. I'd rather have it go into this one because that's where everyone else is going. That's what everything else is doing. This happened because, of course, we set this up later at a later time, and of course, put it to a different account completely on purpose so that we can have this test. No. But now we're going to make this adjustment and put it to the same account, and we can clean up our chart of accounts so this doesn't happen again, so we don't make that same error, or I don't make that same error. So we'll go down below and say save and close. Now note, if we didn't pick this up, it wouldn't really hurt anything, but we have duplicate accounts. It's not necessary. And if we see that now, we can go back to our balance sheet, or we can go back to our profit and loss and see if that change has been made. So we're going to go to the reports on the left. We're going to go to the profit and loss once again. Changing the date, let's change the end date to 12/31/19 and run that report. And you'll see now we only have that one account, the sales of product income. If I select that account, then we see that we have this invoice that we made. I believe it was this one to Music Store Stuff. It's for $777, which isn't the full amount we're going to receive because it only includes the sales price. So I'm going to close that back out. The difference is the $38.87. Remember that will be on the balance sheet. If we go back to the balance sheet, that's going to be a liability that we owe. So it's going to be on the balance sheet to sales tax payable, or to the people we're going to owe, New York department in our case, but whoever we would owe, that's who QuickBooks would select. Then we have the other side, inventory going down. Here's inventory. Selecting inventory. We have this invoice for Music Store Stuff. I believe that's the one. That's the $598. So if we select that, we'll go into it. Now note the $598 isn't here because that's going to be the cost. We can see it because we linked it up top, and this was the cost that we paid for it. Oh, let's close that. The cost on this link was the $598. So if we close this back out, the other side, closing this out, going back up, back to the report, is on the income statement. So that's on our second tab. Profit and loss, second tab, scrolling up back to the report. The profit and loss under cost of goods sold, selecting cost of goods sold, we should once again see that $598 for Music Store Stuff. If we select that item, then here's going to be that invoice. If we scroll down, it's not on there once again, of course, because it's being driven by that item. So this item is what knows it should be the $598 there. For more accounting information and accounting courses, visit our website at accountinginstruction.info.